Welcome back. Well, the market continues to be under pressure. In fact, the Nifty now threatening to go below the mark of 22,400 because that's the level we are at right now. Though the mid cap and the small cap indices have managed to hold on, and the Nifty also, to be honest, in the last few minutes has managed to perk up. It's M&M which is up 3%. Bajaj Auto is doing quite well, though Hero MotoCorp is actually in the red, down about 3% in the trading session. So let's start with that. Rajat Sharma, the founder and CEO of Sana Securities, is joining us on the show. Rajat, the auto numbers for the of March were rather disappointing. What's your top bet within the auto sector, whether it's the two-wheeler space, passenger vehicles, or the commercial vehicles?
Yeah, no, absolutely. I think the only number that was disappointing, I think what you mean is Hero Moto, where I think the overall sales were 8.6% down. But again, the silver lining there was the export sales were up by a mile, actually. And, it's very difficult to say the reason why sales did. Just to give you a disclosure, I hold Hero Moto, and I've been consistently recommending the same stock on your show. I really like two-wheeler space, and I've recommended buying this stock. But look, quarter on quarter, what happens? It could have been, they didn't manufacture enough, they didn't advertise enough. Because when you see Bajaj Auto, the sales are 25% up. So, difficult to say. I really like the two-wheeler space, although at this point, I think a lot of stocks are a little overvalued. I bought them at a price far below where they are trading. 2,800 for Hero Motor is where I got in and recommended the same. So, even if you're a new investor looking to add some stocks to your portfolio, making a fundamentally good portfolio for a long term, you should add two-wheeler stocks, but don't buy them in a big chunk or as a lump sum. Just keep slowly moving into them. And today, stock 2.5% down is a good day to add a little of this to your portfolio. I think they're market leaders. They've got the largest share, and that's not going to get disrupted anytime soon.
Point taken. Actually, in the meantime, let's pull up some of the cement stocks. Dalmia Bharat, for instance, is up in the last few minutes. There's a perk up on Star Cement as well. A couple of other names like, the other cement names like Realty Sector will also come up for you on the screen. And there's a sudden spike up happening on a lot of these names because reports are suggesting that finally the companies have managed to take a big price hike. Earlier as well in the month of December as well as January, there were reports of price hikes, but the company had to roll it back on account of demand not being strong. It seems like that now the demand is conducive enough for all of these companies to probably go ahead and take a price hike. Before we move forward, Nuresh, your view on the cement pack and anything which is showing signs of breaking out?
The largest one, Ultratech Cement, which is coming close to a breakout. The recent swing highs at around 10,200. If that breaks, that would be a clearer breakout. So that's the first one. Second is Ambuja Cements, which is very interesting. The stock had made a top around 600 before the whole cycle, and then the stock fell all the way to sub 330 levels. Made a recovery, and the stock is now today at an all-time high. So a clear-cut breakout here. ACC is the next one, which still has that price point of 2,700, 2,750 to cross. So ACC still has upside and risk reward to be in favor. So for now, the larger names are clearly breaking out into all-time high. So Ultratech and ACC look promising.
Other stocks which are actually holding out. We've already marked what the Aditya Birla Group is up to, but look at a BEL. That's been a very steady show, after them declaring their full year turnover. So that's looking very smart. Godrej Properties is holding out very well. Yesterday, there was a big spike in DLF, and today it's Godrej, which is actually taking a turn in the green. So holding out very smartly indeed. Rajat, just wanted to understand, what do you make of the real estate pack? Because that's had a very, very steady up move for the last 2 years, and it continues to be the same even now. Do you think there is still value on the table and one can still maybe add positions or get in afresh into any of the names?
No, I have not got into any of the real estate stocks. Although I've been reading myself about what's happening in this space, house prices and even commercial real estate is up about 30% in the last 2 years in many pockets of the country. But when I look at the listed players, there's a lot of unlisted players who are doing a lot of good work and coming up with projects. But when you look at the listed players, I think let's look at DLF. The stock is trading at valuations of 97. There was a time when it was available cheap around a decade and a half back. But right now in the listed space, there's nothing so striking at least that I have found, which makes me feel that this is a stock that you should buy. But again, real estate has a very long cycle. So once they do become the flavor to be bought, then the stocks move up really sharply, and that typically happens when there is in the post correction period of the market. Right now, I don't think any investors are going to get attracted to real estate.
935 rupees for DLF, 158% higher. There's a news report on Prestige also, where they have raised debt, I think, they want to scale up the rental business, where they're looking at raising money from Kotak Real Estate Investment and I think GIC, where they have some kind of a tie-up. 4% higher for Prestige Estate. It's turning out to be such a fabulous year for real estate stocks that it is absolutely unbelievable. No chance of any slowdown. I mean, no indications of any slowdown. Markets are really revisiting that entire real estate thesis. Macrotech developers. It went public post-COVID, so the recent data is not going to be, the recent data is very limited. But again, from what happened to the debt problems in their global bonds versus where they are right now, what a comeback it's been. Naresh, I'm going to change gears and talk about one NBFC which frankly has disappointed and continues to disappoint. That is PEL, Piramal Enterprise. Does not matter what the Nifty level is, this stock is underperforming.
So it's been a tough ride for the stock. The previous few times, every time it has come to closer to a breakout, it just flops out. Something or the other comes up. So if you look at the last 4 months, multiple times it came closer to 960, 970, looked like a breakout, and we got stopped out. There were cap downs over a period of time. And even post listing, the stock has had a problem around that 1,000, 1,100 mark. So it's been almost 2 years wherein the stock has done nothing. So for now, till the time it doesn't cross 970 again, would not be interested in. There could be better choices. A lot of housing finance companies have given a breakout, so that could be a sector to watch instead of PL.
But time now to go across to my colleague Sharad. He's been standing by, working his phones to help us understand what the chatter is in dealing rooms today. Sharad, which is the stock on everyone's radar in dealing rooms?
Well, yes, in focus is five-star business finance, and what we are hearing from the dealers is buying is coming in for domestic institutions, which also may include a PMS. Now, importantly, the buying has been seen for the last two trading sessions, and the volumes have also picked up. For the last two trading sessions, 15 lakh shares of exchange hand, that roughly translates into 0.51% stake in the company itself. And interestingly, company will be meeting a UK-based FI, also MG Investments, on April 4th. Apart from this, the key DIs already invested in the company include the names of HDFC AMC as well as 361 Fund. Now, importantly, also there is a buzz in the street that the PE funds may be looking at an exit also. And do remember, there are larger names like Sequoia and also TPG still there. And of course, last year itself in December also there was some offloading of stake as well from the larger PE players as well.
Okay, there's been a lot of debate about what's going to be the fate of the small and mid-cap indexes. Here's Ravid Damani sharing some insight on the same.
Froth is a strong word, but if you were to say that word, it is more in the SME space than in the mid and small cap space. The degree of euphoria or bullishness varies from space to space. So SME has the maximum, kind of froth over there, which has kind of corrected itself due to the regulatory nudge, and I think it was more definitely required. But mid and small cap, you can say, are probably a standard deviation above its long-term average, which makes it on the expensive side, but I won't call it so to say a euphoria or a bubble. That's a too harsh a term in my opinion. And on the other hand, the large cap space is definitely looking attractive. So I think we have the entire gamut and spectrum available in the market. I won't be worried about a small spot in the market being a little frothy, because that would be like tail wagging the dog. PSU is a basket that is defined by the market. We don't look at government-owned companies as a separate basket. What we look for is themes that cut across all sectors. So what has been exciting for us is, so if there is a energy transition as a theme, or whether it is financials, revival in the economy, those kind of themes. Now, if there are players within PSU sector that have the right to win that space, that is what excites us. So, for example, defense is one thing that we were bullish on for the last 3 years. There is only PSU defense as a sector that exists. Private sector is virtually non-existent. So in that kind of a case, absolutely we would buy PSU defense companies. But if you tell me about banking, larger banking companies, then I don't believe that any of the PSU banks have a right to win over there. They are a beneficiary of more a cycle rather than any kind of and the valuation arbitrage existed between the PSU and the private. I think that valuation arbitrage has played out. Now incrementally, I think only a company or a bank that has managed to stand itself apart from the rest of the pack, men and the boys will be separated, so be on the lookout for that.
Okay, men's will be separated from boys, or men will be separated from the boys. That's the word coming in from Ravid Damani. But in the meantime, take a look at Paytm. That's also showing signs of a bit of a perk up. We haven't spoken about it over the last couple of weeks because that stock was fairly subdued. But in the last half an hour or so, that's managed to inch up higher. And let's see what the likes of Policy Bazaar and Zomato, etc. are also up to, because from the lows, of course, these stocks have recovered quite a bit. In fact, Zomato, for instance, was trading at its recent highs around 180, 190 bucks. Sana, Rajat, what's your view on some of these new age tech companies?
Now that's all right. A lot of people associate me with that. That's all right. So, when it comes to new age technology stocks, I'll again give a disclosure first. Paytm is a stock which I had in my portfolio. I got out of it when it fell around 12-14%. So, in fact, I had substantial positions in Paytm. The highest in one of my portfolios was about 8%, just to be very clear with my disclosure. I really liked this stock because after, at 2100 where it got listed, it was a bad stock. But at 600-700 odd levels, it was a good stock if the government had not taken such a strict action on them, because finally they had things going for them. They had a very clearly defined revenue model. They had clear verticals and they were about to turn profitable. And, it's personally, I think, if things revive for them, this is not a bad level to buy this at, because they were eating into market share of a lot of these larger banks, private sector and public sector banks. And, every time I hear this commentary on banks, one of the reasons why I got into Paytm and why I like, a lot of the NBFCs and stocks like tech-driven financial services companies is because I've been saying this for about 5-6 years now. Year on year, I come and say there's a lot of talk around private sector banks. But, if you look at, I think I had this chat with Nikunj once. If you look at a lot of these private sector banks, you look at the likes of Kotak, Axis, HDFC. If you look at their past 5-year stock price performance, none of these banks have delivered anything above 25 to 35%. Since 2019 till 24, this is 5 years. So I'm going pre-COVID levels. And, that's most of these private sector banks, the large private sector banks, whether it's Axis, Kotak, IndusInd, Axis, all of them, 25 to 30. Their FDs have delivered more return than these banks. ICICI Bank is one exception, and I think that's largely because ICICI Securities is now merging into that. So most of the run-up has come in the last 1 year. But a lot of these, you look at the core business of these banks, a lot of the consumer loans, whether it's auto, personal loans or car loans, there's a lot of NBFCs who are doing that. Fee-based income, the share was increasing, which was the big story, is now being eaten into by a lot of the other service providers. So I really don't know what's the future of banking. If you see the West, the same trend has happened there. A lot of the traditional old large banks have suffered for many years despite the bull market runs that you've seen there. And I was doing a deep dive into the banking sector, from April 1st, 2020, which is the COVID bottom, till 1st April 24, which was yesterday. So the last 4 years, if you see the private sector banks, they've on average about 2.25%. And the PSU banks have on average grown about 4.5%. You have stocks like UCO Bank, Bank of Maharashtra, which are 9-10 rupees to 50-60 rupees. But if you think about it, who's opening bank accounts there? The reason they've done well when you look at their accounts, their balance sheets, is because they've reduced provisionings over the years because interest rates had fallen until in the COVID period. And the last year and a half to 2 years, interest rates have gone up from 4% to about 6.5%. So that net interest margins have increased. But going forward, as I've said many times before, I don't think banking is a sector which will be what it was in past. So, it's not performed well for the last 5 years, no matter which bank you look at, and it's likely to change.
Jason, you'll appreciate the spirit of the question here. Your securities firm name is Sana. Is that somebody in the family? How did you come up? What's the story behind it?
No, Nikunj. So the funny thing is that there is a lot of people ask me this. I don't know any Sana at all. I've never known any Sana. It's a word that I really liked. I heard it in one of the old Hindi Qawwalis, and Sana. The word means glory of God. It's an Arabic word. It's glory of Allah. So I really took to the word, and it stayed in my mind. So when I started my own firm, there's absolutely no reason why I named it that, but that's that.
Recording of this show, share it with your family, especially with your wife, I'm sure. I shall send it to you after the show, Rajat. Okay, 15 minutes to go, about 13 minutes to go. Let's see where market's about to shut. The two real, outliers today. One is Aditya Birla Capital. Second is Aditya Birla Retail, fashion retail. Vedanta 5% higher. SAIL 5% higher. JSW Steel 3% higher. Nuresh, now that the index globally, which you pointed out, and thank you for pointing that out, the Dow Jones Metal Index had hit a life high. How similar is this to what we saw, let's say, in 2021? Because I distinctly remember when the Dow Jones Metal Index had hit an all-time high, it kept on making new highs for at least 2 years more. So are we in for that kind of a deep rebound in metals now?
So that's the bet. We played it similarly in 2021. It was via SAIL, Nalco, as well as Tata Steel. Very similar structure. We saw it, given that we have, say, more pricing for metal prices across the world rather than in India in the cycle. So the first index which generally breaks out has been Dow Jones Metals and Mining. So we've seen that breakout happen. The last time when that breakout happened, there was at least a 25% move in the short term on the index itself. So that was very interesting. So right now, whether it becomes a 20% move or a 25% or a 15% is a tough call. But from here on, the upside looks interesting. I would go with a 15-20% upside in most of the names on the metal pack over the next 3 to 6 months.
So that's a view coming in on some of these buzzers as well. But in the meantime, in terms of stock-specific action, it is Tanla Solutions which has actually managed to inch higher. Godfrey Phillips is doing quite well. Electronics Smart India, India Bulls Real Estate. These are some of the other top gainers right now as we speak. Separately, gold, of course, has been one, asset class which has been doing quite well. And since we're talking about the metal stock, Kunal, I wanted your view on the charts of gold in India. I think you told us that it already hit the mark of 70,000. What next?
So I think now in terms of dollar denominated prices, 2280 is the resistance for gold on the dollar denominated terminologies, and I think in that aspect we could be looking at least another $200 up move for gold, because the breakout which had happened was, I think, 2080 to 2090 was the breakout point for gold. This was almost a 2-year, 3-year triple top breakout for gold in that aspect, and it was almost like a 300 to 400 pointer range the asset class had gone into in the last many years. So that breakout potential is almost like a 300 to 400 pointer move for the for gold on the upside. That could probably, of course, gel up with the Indian rupees, gold prices moving up higher. So my expectation is that 70,000 could now be maybe considered as a fresh base for the asset class, and we could be looking at higher prices over the next 6 months to 12 months.
Okay, let's also throw light on what's really happening within the auto pack, and does the volatility in the market really warrant caution, or is this a temporary blip right now? Where is it that investors should be looking at? Any key themes or stocks to look out for? Here are some views coming in from market experts.
Pharma industry, let's take for example, the total industry size is about $50 billion. Total market cap today is $200 billion. This $200 billion in last 20 years has grown at 18x, right? And many companies in that period has become 100x and 200x. So a sectoral growth wealth has got created. This $50 billion, by the time Amrit Kal ends, will become $450 billion. It means pharma itself would have a market cap of $2 trillion.
Asset management companies also we continue to evaluate. At this point, I'm not sure that we have any one of those in the AMC portfolios. Certainly in offshore portfolios as of now, we have very limited exposure to the asset management space. But we do have distribution companies, wealth management companies, as well as some of these other intermediaries which service the asset managers and wealth managers.
There are certain pockets within, like tourism, hotels and tourism, which looks very exciting to us. And I think that is a space where we may have increased our weight in the interim as such. So that's why overall there may be some replacement happening there, but that's a space that we remain fairly bullish on.
The view coming in as to how you should look at FY25, but the starting of FY25 hasn't been great for the aviation sector because just yesterday we got the news that Vistara has actually cancelled as many as 50 flights. There could probably be more. Even the aviation ministry has taken notice of the same and they have questioned the company and asked them to supply more details as well. But first up, let's take it across to my colleague Sumit, who's joining us with the latest on this. Sumit, tell us what's been the impact on the aviation sector. Are we seeing huge queues or big rage amongst the consumers?
Well, as the trouble for Vistara is brewing with more flight cancellation due to unavailability of crew, today Aviation Ministry and Aviation Regulator DGCA stepped into the whole issue. Aviation Ministry has asked Vistara for a detailed plan and is closely monitoring situation. At the same time DGCA, Aviation Sector Regulator, is also closely monitoring the situation. It has asked Vistara to submit all the details about the flight cancellations and delays as well. It is also monitoring situation as to what steps are being taken so that the inconvenience cost to customers is minimum. Vistara has issued a statement saying that the flights cancellations are happening due to many factors including unavailability of crew, taking many steps including clubbing of many flights, also getting bigger planes. It is clearly working to minimize the inconvenience cost to passengers. But today Civil Aviation Ministry and DGCA has also stepped into the whole issue.
Right, okay, that's the take coming in on what really is happening with Vistara right now. But yeah, some of the Aditya Birla Group companies continue to hold out. There's Vedanta as well, higher 5%. SAIL, of course, is looking very, very strong indeed. And Tata Steel as well, I mean, of course, it's petered down somewhat and has had a choppy ride today, but that also is holding out in the green as we speak right now. Naresh, given that metals made a very, very strong move, you know, all through last week, just wanted to understand directionally, what is it that you see for metal charts? I know we've talked about Hindustan Copper being the strongest, but anything else which is looking attractive for trade?
So the whole pack look interesting in terms of stocks which have not gone up and the risk reward is still good is a JSW Steel, a Hindalco. So Hindalco, the previous all-time highs are closer to 620 to 640. The stock is at 570. Recovery has been good in the stock. So that is one. Then JSW Steel, which went through a long sideways patch after topping out in 2021. And now is very close to a new all-time high. So that's the next one. Jindal Steel has been a leader and first one to always knock off new all-time highs. So at current levels, I will go with a JSW Steel and a Hindalco for it.
Coming in some of the metal names, but before we start wrapping up the day, the BTST ideas, Naresh, what's the buy today, sell tomorrow idea?
So first is the buy on JSW Steel itself, stop loss at 864 and a target price of 890 to 900. Second is the buy on Mahindra and Mahindra, which has been showing delayed strength and coming close to a new all-time high. A stop loss at 1950, target price of 2050.
Despite the move, that's a BTSC trade. Kunal, what about you? What are you spotting on the charts?
So I'll go with the first one, buy on Aditya Birla Capital. That's a chart which looks attractive at 200 as a breakout. Targets of 210, stop loss at 192. And Bajaj Finance is apparently a stock which is holding up to above its 200 moving average. After almost like a 1,000-point correction below this key moving average, almost a month and a half back. So that's a strong case of a turnaround for Bajaj Finance. Buy with a target of 7,600, stop us at 7,000.
What about fashion? Aditya Birla Fashion, that is?
Yeah, both
considering
fashion
that's
and
the
finance. I mean, capital both look attractive.
Okay, so that's about the Aditya Birla group of stocks, but we are wrapping up the pretty much in style, because yes, the frontline index hasn't done much today. It's been fairly quiet between that 22,400 to 22,450 kind of range. But just as we're ending the day, there is a bit of a green on the screen right now, so that's something that we'll be happy with. But the banking index continues to be in the red, just mildly so, though the mid cap and the small cap index have managed to further pile on gain after that big rally that we saw yesterday. But for other stock specific moves and what's been the highlight of the day, let's take it across to Winnie.
Absolutely, at least closing the day on a slight bit of a positive note for the benchmark indices. Nifty almost trade for 22,450 levels is what the Nifty is managing to hold on to. Sensex down almost 0.07%, almost on the positive side as well. Managed to see a bit of a recovery from the day's lowest point is the benchmark indices. Nifty Bank on the other hand, which was trading in the green, has slipped below, and it will be closing the day almost flattish. We could say nothing exciting for the Nifty Bank. All the excitement came in from the broader markets is what we could highlight, and that's why the run up that we've seen in the Nifty mid cap looking at pretty at 1.15% in terms of an uptick that we could see almost more than 1% for the Nifty small cap as well. Names and the sectors that have managed to do well, and in the terms of the top pullers that we have seen, or top stocks that have done well in the Nifty 50 today, let's pull up the auto names that we have. M&M, what is Hero Motor doing, Bajaj Auto, all these are surely the ones to watch out for. We also had HDFC Bank making the list in the Nifty 50 among the top gainers today. Other than that, let me look at the other names that are doing well from the small cap side. And the mid and small cap side, we did have AB Capital, AB FRL, all those buzzing in trade on the back of news flows. AB Capital on the back of a brokerage note that we had. So yes, that's interesting to watch out for. From the banking side, we also had SBI, that is in terms of a good contributor coming in from the Nifty 50. Other than that, in terms of which stocks in the Nifty small cap 100 are at a 52-week high. We saw Reddington, Cochin Shipyard, Graphite, all of them seeing very strong gains. While in the mid cap, we did have SAIL, JSW Energy, even something like the Volta saw a very strong up move. The summer stocks seems to be a bit of a trend that have been shaping up as well. Voltas, Havells, all these are the ones that we should watch out for. Look at Blue Star as well, closing the day with gains of almost 2%, as more than 2% as well. Let's move on, talk about real estate names. We did have a brokerage note that came in on the real estate stocks. So we did have Prestige, Godrej Properties, Oberoi Realty, all of them in focus today. And we'll see all of them are ending on the positive side as well. 3% gains, more than that is what we're seeing after we're seeing the note from Stanley. Other than that, let's pull up the charts for defense names. BEL, HAL, all these names, all these companies yesterday reported their Q4 performance update. So today also we're seeing a run up coming in because we did have a brokerage note from Jefferies that was a bit of positive side for these defense names. Defense names continue to see an up move. BEL, HAL, data patterns specifically in focus on the back of that brokerage note that we saw. Tata Tech too saw a jump up coming in and trade today. Why? Because they have signed a large JV with BMW, and on the back of that, Tata Tech picked up pace at the end of the day. Second half of the day, 4.3% uptick for Tata Tech. And AG Infra on the back of order wins. Patanjali, not that much of an excitement because the Supreme Court was dissatisfied with their reply. And obviously, other than that, Som Distilleries are some of the other names that have been in focus today. So mainly today, what market was led by was the mid and small cap advance decline ratio in the favor of advances versus decline, and Nifty managing to close on a slight bit of a positive and a green note.
If you like this video, then like, share and subscribe to ET Now.